everyone. This is the Food Institute podcast series. For over 90 years, the Food Institute has been the best single source for current, timely, and relevant information about the food industry. My name is Brian Choi, Managing Partner and CEO. Today, we have a special guest. We have Patrick O'Reilly. He's a principal and member of the firm's advisory services practice. He covers all things related to technology, business plan implementation, financing, succession planning, and taxation. And the great thing is he's also has a specialty in food and beverage manufacturing and wholesale distribution. So welcome, Patrick. Thanks for your time today.
My pleasure. Thank you for having me.
So today we're going to talk about a number of different subjects, but maybe we could start off talking about the economy currently, how the coronavirus has impacted the food and beverage industry, and the types of questions that you're being asked by your clients. If you can just comment on that and share what your experiences has been, over the past few months.
Sure. Well, I think everybody knows it's pretty much a lockdown on restaurant patronage, and anybody who had the capacity or the ability to do takeout or delivery has been doing that. I think that the food delivery services have really, hit the jackpot as far as this, just like the grocery stores have and the big box retailers with shelves being emptied. But the restaurant people, generally speaking, are really, really hurting, and probably hospitality in general, when you look at hotel closures and entertainment and those types of things as well. It really is just pretty much gone from 100% participation and activity to zero, essentially right around St. Patrick's Day is when it all happened.
Right.
For the majority of the country. So you look at massive layoffs and employers looking to figure out ways that they're going to be able to pay their rent, or maybe even be able to reopen when this all turns around. It's harrowing times for anybody in the restaurant industry and hospitality in general.
Right, and so what are the types of things as a business owner, but even as a advisory person who's been dealing with these types of companies, what have you been advising them like currently, and on everything from employee management to liquidity to supply chain? Like what are the main topics that you've been dealing with currently?
Sure. Marcum LLP is an accounting firm nationwide, and we have a very robust food and beverage advisory group, or actually food and beverage group. We do everything from assurance to tax to advisory. And we have fielded questions from clients on all of these various topics that you just mentioned. But the biggest thing probably is cash flow. They're just trying to figure out, how they're going to make ends meet, what types of cuts they should make. We're recommending people reach out to their landlords or to their lenders if they own their physical locations, and ask for extension of terms. Landlords, by and large, have been either deferring rent for 3 months or agreeing to have a portion of rent paid over 6 months or maybe even a year with a catch-up period after that. Some of them are requiring that the CAM expenses are being paid, so common area maintenance are being paid, but the rent is something that they have some flexibility on in some cases. A lot of lenders are giving 3 to 6 months of interest-only allonges to the loan terms, and it's a simple form, one-page form usually, that the guarantors would have to sign. That is a big nut for people. I haven't had a lot of success with big utility companies. I think that your natural gas, your propane, your electricity, maybe even internet and music streaming services, things like that, are going to let you put a pause on your services, maybe with partial payment, and some terms can be reached that way. The other, obviously the two biggest expenses in a restaurant are food costs, beverage costs, and then labor. So labor, really, when you don't have a restaurant that can be opened and you're doing limited service, takeout or delivery, you're really looking at just laying off massive amounts of people and cutting that payroll and having them file for unemployment. Now, the good thing about that is the government has kind of stepped in and guaranteed those unemployment benefits, and they're not going to be counting against your experience rating as an employee, as an employer in most states. I believe maybe all states will probably pass that eventually. I know that many states have done that already. For food distributing companies, that trickle probably hit them maybe 2 weeks, maybe 3 weeks after it hit the retailers. So distributors and breweries and alcohol distributors really kind of probably had a little bit of time to adjust to the new norm, and they are going to be facing the same types of decisions that the people on the front lines in retail are going to have faced already in the past 3 or 4 weeks. So I think you're going to start to see, supply chains shifting from retails and chains to grocery stores and other outlets, and hopefully they'll be able to keep product moving in an expeditious way so that there aren't any shortages or anything like that. But it really comes down to liquidity. If you have a restaurant that had, a well-run restaurant has a 10-12% margin. By and large, most restaurants are 5% range, and when you take a hit like this, it's going to be very, very difficult to recover from it. Particularly, for like an Irish restaurant or something like that lost St. Patrick's Day. That's usually a big, huge part of your year, and that kicks you off a slow winter period and into the maybe the busy summer season, and not having that is a big hit.
What do you think? How do you think technology has impacted this? So e-commerce has seen a huge growth, right, since the coronavirus impacted the economy. Have you seen that online orders somewhat mitigate the decline in revenue? And do you see technology being after everything is settled, the dust is settled? Do you think technology will be an increasingly more important factor in let's say a restaurant's success?
Absolutely, no question about that. So if you had an online presence, you would either with a website or through Facebook or some other way or Google for that matter, that you could put a menu out and take orders. If you had a POS system, a point of sale system that had scalability to be able to be put as a widget in your website or in whatever online presence you have to kind of get the word out there, not to mention just the actual capacity in the back of the house and the front of the house to be able to handle takeout orders. Did you have takeout containers? Did you have bags? Did you have the ability to do that? Can you do touchless transactions? Do you have a tablet that you can have somebody touching, the customer touching, that you can wipe down without having to have money change hands and just using cards, or having the payments coming in online? So if you had a POS that was robust and could handle those types of transactions in a pretty quick pivot, those companies I think are doing pretty well. If you had a DoorDash account or one of the other, Uber Eats or something like that account already established, I think those companies just got absolutely crushed with new applications, overnight. Basically
Right.
the same time frame that the DOLs across the country, the Department of Labor's across the country, were getting, inundated with unemployment claims. All of these online delivery services were getting smashed at the same time. So, if you were able to be nimble and pivot in that way, or you were already doing delivery or takeout in some form or fashion, you just needed to scale it up. That was a huge boon, and that online presence really makes you have a competitive advantage, and not really a competitive advantage in that sense of the phrase, but really an ability to possibly maintain operations in some small percentage of what your traditional business was looking like before COVID hit.
Right. So previously, would you say that in general, like say for retail, online sales typically, from what I've read, ranged anywhere from 10% to maybe even 30% of overall sales. Is that fair? Are those figures off based on your experience?
Well, we have several clients who just weren't geared up for it, and a lot of them have, whether it was for safety concerns for their employees or for they just wanted to not be open and have people be out and about where they shouldn't be out and about. So a lot of people have just decided to just shutter, and ride it out. The ones that had takeout capabilities are seeing something north of 10%. I haven't seen anything close to 30%, but that's certainly a possibility in a more urban setting. I think maybe a metropolitan area would be able to do that. I think if you were getting 10% of your sales when you weren't really doing any takeout or delivery before, I think that's an achievement. And I think that there's probably going to be a lot more interest in takeout and delivery even after this breaks and there's, kind of a quote unquote return to normalcy, which, who knows what that's going to look like at this point in time. But I think there's probably incentive for anybody who's going to be considering reopening and continuing operations, which I would hope many, many restaurants do, looking at that online presence and delivery option as a bigger piece of their future operations.
Right. Yeah. As someone who's followed the food industry, and particularly on the restaurant side, it's my personal view that I think online is going to see explosive growth actually, and just as we've been seeing, the past couple of months. But you know, yeah, it'll be interesting to see how things play out. Now, in the restaurant industry, what's what does it look like in 3 to 6 months in your view? Um, I would imagine that a lot of the restaurants they will fall under bankruptcy, right? Just given you mentioned just the liquidity needs. We don't know how long how long it takes for things to get back to normal. But what do you think it looks like? How will the restaurant industry landscape change? Looking at it from a medium to even longer term in your view.
It'll be really interesting to see. I full disclosure, my wife owns and operates a small restaurant here in the Portland, Maine area, and so this is pillow talk for me as much as it is business talk.
Right.
So it's you live it and breathe it, and it's a little scary to think about that. I think you're absolutely right about there's going to be explosive growth in online ordering and either delivery by a third party or pickup or delivery by employees of the restaurant, and that is going to really kind of be driven by what it looks like inside the restaurant. So your traditional bricks and mortar place that has well, you're in New York, so I lived in New York for 10 years and went to NYU, and I know very, very uh, intimately, and I choose the word intimately with purpose, how restaurants are laid out in New York. It's almost always been community seating just because they had to squeeze so many tables in a tight space with the rent costs, et cetera. So you have a small space with tables literally touching each other or just a few inches apart. What does that look like in 3 to 6 months? Is that restaurant that had a small square footage and seating for 45 people going to be able to survive with community seating in there, community distancing seating in there that is going to give them a head count of 20 or 25? Uh, are they able to do enough turns to get the covers that they need to succeed in that environment? I don't know. I don't know if people are analyzing that and thinking about what this looks like on the backside. You have a bigger space and you can spread things out a little bit more, or you're wide open, or you're going to go to fast casual with limited seating and really emphasize more pickup or delivery options. You may be able to survive. I think it's going to be really interesting to see how many restaurant groups are able to ride this storm out. And really the big thing where I think you're going to see a lot of bankruptcy filings and businesses just not making it, restaurants just not making it, are going to be the onesie twosie operations that maybe were teetering before this happened. Like I said before, there's very slim margins in the restaurant business, and if you don't have some economies of scale and some consistency where you can ride out a wave of a downturn in one geographic area or one location with a decent year in another location or geographic area, and kind of cobble together a decent year for the umbrella organization, that's not easy to do when it's one or two locations in the same area. in general, but this is everywhere, right? So this is
Right.
all over the whole country, and everybody shut down at the same time. So my saving grace in all of this is that I hope that there's going to be a cabin fever effect at the end of this, where people are, obviously doing it in a smart and safe way, are going to be able to come out and say, okay, we're ready to go back and support the local businesses. We've been doing takeout or something once a week. We bought gift cards and haven't been using our gift cards. So we've been just buying the gift
Hmm.
cards and holding them. Now we're going to go back out and maybe use those gift cards, or maybe even support them with more in person business. I really hope that silver lining that I would love to see happen comes to fruition.
Right. So in your wife's business, and please feel free to talk about even some of the clients that you're advising as it relates to the employee headcount. So have most of the employees been furloughed, and have pretty much most of them applied for their unemployment benefits? So how have you been thinking about that, and
Right. I think
other businesses?
I think that by and large, anybody who is a directly tipped employee, so servers and bartenders, maybe even hosts, runners, bussers, that type of thing, people call it different things. Those folks are pretty much been laid off and furloughed. There's just there's no opportunity for them to get tipped to any great degree. You might keep one or two people on to help with the takeout and delivery services. But there's some barriers to that. If you hadn't done delivery before, then how are you insuring these people? Are they using their own cars? Are they using company cars? Or what do you have the proper liability insurance in place to cover that type of activity? So there's some barriers to some of that stuff happening. By and large, what I've seen is the hourly staff has been furloughed. The kitchen manager, the front of the house manager, the chef, general managers, assistant managers, anybody who was on salary, they've tried to keep as many of those people as they could, and they're cobbling together whatever delivery or takeout service that they have right now with the lockdowns with those salaried people. Um, Not to say that they're keeping all the salary people, or that they're not, paying 2/3 wage or something like that. Um, but by and large, that's what I have seen, and I think that the people who have applied for and most of that frontline staff has applied for unemployment. The good thing about that is the unemployment takes into consideration tipped wages. So your gross wages, including the tips, are kind of what the baseline is for your unemployment
Right.
factor.
Got it. Interesting. And so for the district, so the way I look at it, so we have, you have the retail, that's pretty much like 90% has been, or 100% shut down. The distributors, depending on which distributor, they have a more of a diverse kind of revenue. So they've been hit less, right? So call it maybe 50%, up to 50%, they've been hit less. And so, and then on the manufacturing side, they're kind of on the further back, on the chain, on the supply
On the
chain,
timeline, yeah.
on the timeline, and they seem to be impacted the least out of those three categories. Is that fair? Is that a fair statement?
I think that's probably fair. And the least is, losing 25% of your business is still a lot, but that may be the least compared to somebody losing 80 or 90% of their business and somebody only losing 50% of their business. So, yeah, I think that's probably a fair statement. And then when you get back to the growers, farmers and producers, I think in the Northeast where we are, they haven't really ramped up for their season. I think that they're still, doing seedlings. I think they're still, cobbling together what they're going to need for irrigation needs and all those other types of things that they typically would do in April and May. And I think that they probably are going to be able to continue on business as normal. And when they get into their growing season in full force, which is happening essentially right now, right? They are kind of, I hope, hedging their bet, thinking that there's going to be a market and a viable market for those products once we get into the summer months. So I think that when you talk about liquor distributors, beer distributors, breweries, I read an article said there's something between liquor, wine, and beer. They're all sales have shot up between 25 and 45% in the last month. So I think that they have just different channels. So they're not delivering half barrels and six kegs to uh, bars for tap. They're packaging all of that goods and taking it to retailers that are still able to sell. packaged goods. So I think they're just kind of may have had to pivot a little bit in how they're producing and distributing their products. But I think that they've actually had an uptick in sales in some
Right.
areas.
Interesting. So one of the main topics that I wanted to kind of talk about with you and get your perspective is, we've heard and read a lot about the stimulus bill, right? And there's different categories of businesses that are eligible to apply, right? So I've seen everything from the economic disaster relief fund, to the SBA loans, to the payroll protection. Can you kind of share with our audience, what the difference is between these various programs, and what companies need to be doing now as they kind of think through the whether they should apply or not, the success ratio, some of the complications that they might experience as they go through the application process.
Sure, I give you an overview, but I'll just give you a caveat that this is a very fluid situation. The rules and regulations on all of this are changing, so I highly encourage people to speak to their tax advisor, their banker, and at the end we'll give some contact information if you haven't been getting good information or timely information from the folks that you have to work with. Be happy to help you here at Marcum, or get you to somebody here at Marcum that can help you in your geographic area. So essentially, there are really kind of three main programs that I wanted to mention today. Two of them I'll just mention briefly, just to give an overview, and then I want to talk about the PPP SBA loans, the Paycheck Protection loans. So the first one is the credit for employers' payroll taxes. So this is a program where you can get a credit against employment taxes for each calendar quarter equal to about 50% of your qualified wages. So this is kind of one that's going to be not timely, not cash in your pocket right now, but it's something that people should definitely look at on the long term, and it will help you save on some payroll taxes later in the year as you get through the quarters of 2020. The other one, which is a little bit more interesting than that, is the Economic Injury Disaster Loan, or EIDL. These are eligible. This loan program is eligible to any small business, private, and sole proprietor, or any actually nonprofit organizations also. It's up to a $2 million loan. The interest rates are 3.75 for profit entities and 2.75 for nonprofit organizations. It's up to a 30-year term based on the borrower's application. 4 months of payments are deferred. There's a checkbox on this form where you can get a $10,000 emergency funding. Although I haven't had any clients actually, I've seen clients get confirmation numbers, but I haven't seen any clients actually get the $10,000 yet. So I'm not sure how the funding of that is actually going to come through. This loan has, a little bit more flexibility in how you can spend the money, but it has a little bit more, red tape on how you get the money and who qualifies and what you have to put up for collateral. So you can use it to pay any fixed debts you have, payroll, accounts payable. So basically, any bills in the operation of the business that you wouldn't be able to pay because of the disaster. Collateral is required for loans over $25,000, and there is a personal guarantee requirement for loans over $200,000. So that program is not the one that everybody's kind of thinking about. The one that everybody's really thinking about is the Paycheck Protection Program, or the PPP loan. This is administered by the Small Business Administration, the SBA. Any business with fewer than 500 employees is eligible. A 501c3, a nonprofit with fewer than 500 employees, would also be eligible. That includes, on the for-profit side, it includes sole proprietors, it includes independent contractors, it includes self-employed individuals, tribal businesses. The business had to be in operation before February 15th of 2020, so you had to have a going concern prior to the COVID-19 epidemic hitting. So it's basically a program that is geared towards helping existing businesses continue to operate, right? Loans can be up to 2.5 times the borrower's average monthly payroll costs, not to exceed $10 million. So the payroll costs include salaries, wages, commissions, Tips, very, very important thing in the restaurant industry, that tips are
Mm-hmm.
included in that calculation. Any payments that you would have made or are making for vacation, parental, family, medical, sick leave, anything like that. Group health insurance benefits, the insurance premiums that you pay for that, so the employer cost of those premiums. Payment of any retirement benefits. So if you have a 3%, safe harbor contribution that you make on a simple IRA or a 401k or something along those lines, that cost is also included in that calculation. And then payment of any state or local assessed tax on compensation to the employee. So that typically would be state unemployment contributions that you would make, which are usually a small percentage of your payroll that goes into that fund. That does not include any with state or local withholding taxes, so not income taxes are not part of the calculation, but the unemployment contributions would be. Term of the loan is 2 years. The interest rate is 1%. There are no personal guarantees required for the loan. There's no collateral on the loan. There's no prepayment penalty. So it's a very, very attractive loan program. I think that without exception, any of my employers in the food service industry, and includes breweries, have applied for this. I've had several applications already be approved. And actually, yesterday morning, I had my very first client get funded. So they received $225,000 directly into their bank account. I can tell you that it seems to me that the easiest path to getting funded is if you have a relationship with the bank already, if that bank already was an approved SBA lender, and then the feather in the cap is if you had already gone through an SBA loan process with that lender at that bank. That seems to be the path of least resistance to getting something in the door, or to getting something in your bank account as quickly as possible. Now, this loan program, I think, is being rolled out to many, many banks who are not traditional SBA lenders, including credit unions. So it's just a matter of, if it takes you a little bit of time to set up a bank account. Obviously they have to have a bank account there because they have to have a place to put the money and be able to track your usage of it. If you have a relationship with that lender, that helps. If you have a relationship with the bank already, that helps. If you have a relationship with the SBA program in your state, that helps. So any of those types of things should kind of help people help lead them to a bank that is going to be amenable to doing this loan as expeditiously as possible.
One question that I have, Patrick, is there's a lot of question about the loan forgiveness part of these programs. Can you share a little bit about um, the likelihood? What needs to happen for there to be loan forgiveness? What percentage of the loan is eligible for loan forgiveness? Are the details clear at this point?
So yes and no. So the real kicker, I think, is that the SBA has come out and said that they are going to have more detailed information. I'm just trying to find a memo that I got across my desk yesterday. Yeah, this is from a memo issued on Wednesday. Actually, sorry. Yes, last Wednesday. This was issued last Wednesday, and it basically says, "quote: The SBA will issue additional guidance on loan forgiveness." But I can give you what we know right now, and as I said at the onset, that this is a very fluid situation. So you can use the proceeds to pay interest on a mortgage obligation, rent on a lease, and utility payments. So that includes electricity, gas, water, transportation, telephone, or internet. 25% of the expenditures that you make can be used on those other things. 75% of the expenditures have to be used on payroll. And that's not just payroll, it's all those things related to payroll that we talked about before. So, tip replacement, health insurance, retirement benefits, those types of things. So that all in payroll cost has to comprise 75% of your expenditure of loan proceeds that you receive. Now, that number is reduced if you don't hit some certain benchmarks. And this is where I think that there's going to be a lot of work for you to contact your tax advisor, or your whatever professional you're working with advising you on this program. there's an 8-week period that starts from the time you close your loan, the loan or origination date. So from that day forward, moving 8 weeks in the future, you need to come in and basically you have to get people back on payroll, and sometimes that might be simply replacing their unemployment benefit, because if you're a restaurant and you can't open, you're obviously not going to hire back. You can't hire back everybody and put them to work in the restaurant, right? So you're going to be paying. You're going to call those people back to work. You're going to pay them the payroll, which is then going to replace whatever unemployment compensation they were getting. And then as you get them back to work, as you get open, and you'll be able to either rotate employees in, or get them some shifts so that they can get back into the work environment. You're going to have a credit of those people coming back on to payroll. And the whole point of the program is to get people back to work, and to get the number of employees that you had, whatever the application, the borrower application you put in. You have to say, this is my average payroll. This is 2.5 times my average payroll. This is what my loan should be, and this is how many employees that I'm protecting with this PPP loan proceed. So you need to get a certain number of employees back, and it's the number that I've seen so far is you can't reduce your total number of employees by more than 25%. So you have to basically get 75% of your workforce back in place to avoid having that loan amount reduced, the forgiven amount reduced.
Got it. Got it. Have you based on your interaction with your clients, have you mentioned the one that actually got funded yesterday? How many have been able to apply successfly, or have they run into the website shutting down because of too many people applying at the same time? Like what's been your experience in dealing with your clients in this matter?
So I'll tell you, Wednesday and Thursday, the loan program, if everybody knows it, it opened up at roughly 9 o'clock in the morning last Friday. Friday the 3rd. So Wednesday and Thursday was absolutely insane with people trying to figure out what they needed for documentation, how they had to support it, which bank they should use, getting in contact with their bank, getting the application together, filling it all out. And by the way, the application changed twice in those 2 days. So that was a little crazy. So all the people that I have heard about here in the Northeast, so Boston North, who applied right at the bell, have gotten approvals already. 100% of them have gotten loan approvals back by now.
Oh, great.
Just a small number of them have been funded, but everybody who got their application in, let's say by the end of the close of business on Friday, got approvals either over the weekend or early this week. People who have kind of stumbled and had their application rejected or pushed back by the lender for one reason or another, different criteria. They didn't agree with the numbers. They didn't have the proper payroll documentation to support the calculation that they did, et cetera. Those people kind of are still waiting to get those approvals in. So they really got a good handle here on the ones that got through early on Friday, and I think that they've just been inundated since then, and it hasn't been able to get through very easily. I haven't heard outside of, I know Wells Fargo stopped taking applications. I think Chase Bank has done some throttling down of it, but the program stays open until the funds are gone. So not very much has been funded. So I think even if you haven't applied yet, I think you should absolutely get your information together and apply. There's a lot of money on the table, and not a whole lot of it has been distributed anywhere in the country so far. So it's not too late to get on this and to submit the application.
Great. That's great. That's excellent information. So we're coming up to the close. So Patrick, if you can share a little bit about your contact information, if any of our listeners want to reach you and want some resources about learning about the stimulus bill and the various types of loans, how can they reach you or your firm?
Sure. I know you're going to post some information along with the podcast, but My contact information here at Marcum is patrick.o'reilly, and my last name is Oreilly at Marcum, MARCUMLLP.com. And I'll even give my phone number. It's 207-352-7720. I'd be happy to answer any questions people had, or point them in the right direction, or connect them with somebody here at Marcum who could help them more directly.
Great, and we'll have those links available up on our website and YouTube channel as well. So, with that, thank you, Patrick, for your time. Very informative, and great to hear from someone who's actually in the restaurant business to give a firsthand account of what you've been experiencing. So, thank you very much for your time, and look forward to connecting with you again soon.
Sounds good. My pleasure. Take care.